Do not, and I repeat, do not make this rate mistake. Don't get caught up listening to the news thinking that all mortgage rates are created equally. Now, mortgage rates are high. Yes, mortgage rates are actually higher than the 25-year average, but mortgage rates are not impacted by the same economic factors. So let's talk about fixed rates today. All right. Over the last 75 days, we have seen fixed rates decrease by almost 0.75%. A client looking to purchase with less than 20% down payment will be getting a rate in the high 4s to low 5% range now. On October 20th, 2023, this same client would have been in the 5.75% mortgage rate range. Why the decrease? Because of the bond yields. In Canada, the bond yields have steadily decreased over the last 6 to 8 weeks. So we've started seeing lenders reduce their 1, 2, 3, and 5-year fixed rate options. As I said at the start, many people do not realize that mortgage rates are impacted by differing economic features. When the bond yields in Canada decrease, so too will fixed rate mortgages. Now, in comparison, let's talk about variable rates. Variable rates have been holding steady over the last several months, all right? Even while fixed rates, as I just discussed, have started to decline. Why is that, Eric? Because variable rate mortgage products are based on Canada's prime rate. So lenders will take Canada's prime rate and offer a deduction from that prime rate. So what does this mean? Let's talk about that same client. All right, someone purchasing a home with less than 20% down payment, they will be offered a variable rate of prime minus 0.9%. Now, what that means is that prime is 7.2%, so this client would get 0.9% subtracted from that for a starting rate of 6.3%. The prime rate in Canada will only change after the Bank of Canada makes its rate announcements. This happens every 6 weeks approximately, or 8 times over the course of a year. Therefore, variable rates have remained fairly stagnant over the last 6 months because the Bank of Canada hasn't increased its policy rate. So the choice between fixed rates and variable rates, it comes down to each client's unique circumstances, all right? It comes down to their preferences. It comes down to, intricate details about their portfolio and their profile. But as of today, clients will qualify for more when they choose a fixed rate because fixed rates are lower and therefore the stress test is lower. The math is important to consider because anyone who chooses a fixed rate may enjoy the stability of predictable payments, but they run the risk of paying more interest over the course of their term if the Bank of Canada begins dropping rates and lenders' prime rates begin to decrease. So where do we go from here? Getting a mortgage, it is a complex and hearty stew. Client situations, preferences, short-term, long-term goals, it all needs to be balanced along with our good buddy math. Be prepared for a lot of rate changes and rate scenarios over the course of this year. A good mortgage agent is one who handles each client's file with sound budgeting and mathematical prowess. A good mortgage agent is one who recognizes that client strategy and success will enhance your business 100-fold.